So Vanessa, let me start with you. Imagine this was 15 years ago, for someone else, not for you. What would you advise them to look for if they're going for their first property investment?
Yeah, similar to what Nitin said, it's about surrounding yourself with people that know what they're doing. So I think there's also in this industry, there's a lot of gurus out there, like property gurus. I think it's safe to say that that probably do actually make more money from training than property. And that's fine. And as long as it's good advice, then why not? But what I would say is there's a lot of information out there on the internet. There's lots of good information. There's lots of Facebook groups you can join. And like Nitin said, there's lots of professionals that you can lean into for advice. So my advice would be really one thing that I struggle with, maybe it's more personal to me, but was taking action. It was the fear of making a mistake. So because I was new to it, when you appraise a deal, so when you're looking at a property, trying to work out what stacks, what's good, so really starting with the end in mind, like what do you want from property? What is your time? What's your availability to give to property? Because in some ways, there's so many different strategies. There's serviced accommodation, there's, like Nitin said, HMOs that will give you better yields. But what time have you got to put to those strategies? Because they can be very demanding. So you really need to have the right structure in place, the right admin in place. If you want to be hands-free, as people keep saying, which I'm not sure it's ever, when you're directly a landlord, whether you're really hands-free, but, get the right people around you. Really think about what you want to get from the property. Is it for cash flow? Is it for capital growth? Is it a mixture? Are you doing this for your children? And work backwards from there. And when I look at particular properties, for me anyway, it's about adding value. So if you can get some kind of discount, then great, and add value. That's the sweet spot for me anyway.
So you're a bargain shopper.
Yeah, but what I'd like to caveat that with is, and this is something that I did, which I'll hold my hands up to for a while. I probably lost opportunities because I was looking for that unicorn deal. I was looking for, this amazing deal that would yield really well, and I'd be able to pull my money out and all this. And in that time, searching for these deals, I could have bought more properties and just cracked on. So don't get too caught up in the perfect deal as well. That's what I'd say.
And Nitin, what do you suggest if you were asked, what should I look for? I've got maybe a few $100,000 to invest. I'm a first-time investor. What should I look for? A, B, C, 3 pointers maybe.
Sure. I think, first of all, I'd actually really go back onto what Vanessa mentioned. I think it's pretty much spot on. I think it's quite important where, let's be honest, everybody wants to get involved into property. Everybody wants to make money in property. And you are sold this dream by all these misleading there's kind of good information and there's bad information. And I guess it's very important that you can actually separate the two and you can actually see what you should listen and what you kind of can almost, what you should ignore. And I think that's kind of really, really important because people are sold this dream of this hands-free investment and this and that. You just sit back and then you're going to get bags of money coming in. I think the good thing is there's a lot of money to be made in property, but then equally there's a big opportunity to lose that money as well. So if you don't do the deal right, then that can actually fall flat on its face, basically. So it's important that you actually do things right. And there are a couple of things which, again, she hinted at. It's important when you say, what is a good deal? The definition of a good deal could be different for depending on who you are and what you're actually, what stage of your life you are at, whether you've got more time to invest in, so you can actually be putting in more time and ultimately, or do you have cash? So essentially equally, so that's important. So I know you mentioned like if you have got a couple of $100K, what would you be looking at? But I guess different people would approach it differently. Some people would say split that into a few properties kind of thing. Others might say actually if you don't want to be spending a lot of time, just focus on getting a bigger property, etc. But it's quite important that you understand what is it that you're trying to achieve from this. And when I started my journey, it was very similar, where people asked me all these questions, and then my answer was, I just want to make money, and ideally I would want to make cash flow. I would also want to make yield and everything. But you got to be like true to yourself and understand what is it that you really want to achieve, and at what stage do you want to be getting cash flow out of it, and at what stage do you want to be actually getting appreciation, etc. So those are the key things. And I think this is kind of what led to me starting Property Deals Inside, because again, going back to Vanessa's point in terms of how do you know what can stack up, and we see a lot of investors in a similar boat where they're like waiting for that unicorn deal, or waiting for something to just be that magical deal because they've been sold that dream by somebody, right? I think what you really want to do is, yes, it's great to have a below market value deal, but if we can actually identify what is the right value of a property, can you do due diligence on the property quickly? Because that's very, very important. And I think this is sort of another pointer, going back to what you were asking in terms of 3 pointers. What I would say, identifying what is it that you're looking for, then having the ability to say, can I quickly analyze this deal? Can I actually stack up the numbers, and can I mean, and this is again going from my own personal way, coming from a tech world, I actually launched this for my own initial analysis, because I wanted to be able to quickly analyze something, because there are two types of deals. One, they are basically sold as below market values, and then you just basically have a fear of missing out, which you don't want to end up jumping on. And the other time, when there's a true opportunity presenting itself to you, you spend forever analyzing it. By then somebody else would have taken it. So it's kind of having the ability to be able to quickly look at what really is a true deal, and acting. And actually, I think Vanessa made a very good point on, you need to take action, and as long as you're doing your own homework, then I think you'd be fine. So you may make more money in one deal versus the other, but it's basically taking action is important.
BMV seems to be a very misleading metric, I guess, because again, market value can change with a lot of other factors, right? So we were doing a couple of deals, and I think market values that we determined 1 year ago does not stack up today. So even though it was BMV then, it is probably not today. But interestingly, I think I'll go back to Vanessa and ask her comments about the categories. You mentioned serviced accommodation, HMO, etc. But for you, or for someone individual, just like yourself, who probably has a day job or doesn't, but what do you think are the best investable categories? If you go from the top, real estate can be broadly divided in 10 types of asset classes or more. But what would you say the top 3 are, if you want best of both worlds?
Yeah, okay. Well, I mean, I think that buy-to-let is a good, your just vanilla buy-to-let is a good place to start, in terms of not taking on more than you can chew, in a way. But also the reason for that, and if you're a cash buyer, okay, it's slightly different. But if you're leveraging and you're using finance, a lot of lenders won't really entertain someone that hasn't had a buy-to-let property if they want to move on to a HMO, for example. Now, excuse me, that's quite a sweeping statement. There are specialist lenders out there, so there will be a number out there that probably would do it. But across the board, usually they like to see an experienced landlord before moving into a HMO, for example. So really, from my perspective, I think starting with a buy-to-let, at least, to get your, to get into being a landlord and understanding all the compliance, because there's a lot of compliance as well. I always recommend having a property manager or a letting agent personally, because I think, again, start with the end in mind. If you're going to grow a portfolio, having one property and having one tenant that's going to be asking for things every now and again is very different to having 10. So I think start with a property manager, even for that one. I would recommend. That's just me personally. In terms of strategy, to me, natural progression would be to a HMO if that's something that you want to take on. I personally haven't got any HMOs, so I'm quite open with that. It's not something that I've wanted to do, but I have lots of people around me that have HMOs and they enjoy it and they get great yields from it. So it's a very good investment. Again, I would say get a property manager for a HMO, because you've got one building with however many tenants. It could be from 4 to there's multiple HMOs. So and then you've got SA. All of these other strategies are, I would say, more advanced, and whilst they yield better, you get better returns, it comes with more work. So
what about commercial? What do you think about commercial property?
Oh, commercial full stop. Yeah. Commercial's good. I mean, it's very popular at the moment. It has benefits in terms of tax as well when you structure your portfolio. I can't give tax advice, but we have great tax advisors that can help with that. Commercial's good, particularly where you've got commercial with uppers, so where you've got flats above it. That interests me very much. And I mean, really, there's so many strategies out there, but what I'm into more now is like commercial to resi conversions as well, that kind of thing. But I'm full-time in property, so it's different. It depends how committed you want to be.
Yeah, conversions might not be something for a first timer.
No,
but certainly
I wouldn't personally recommend it, but everyone knows their own capabilities, and who am I to stop anyone from that? But I'd get a few buy-to-lets and a bit of experience under your belt first. Yeah.
Nitin, what do you think? Investable categories, what's your take on it?
Sure. I think I'm actually gonna I think align to what Vanessa just mentioned. I guess it's important, depending on which stage you are in. If you're just early on starting, and try and focus on what you can achieve. And then, like I said earlier on, it's all about what is it that you're comfortable with. There are so many strategies out there, whether you look at adding value as in doing buy, refurb, refinance kind of thing. That's in some cases, it always remains my number one, because if you have the right team who can actually do these, you can actually get some people in to add some value to the property, and that allows you to release some capital, basically, so you can refinance that, and that allows you to have very little capital in that. That is obviously always the thing, but it's not always about doing your first deal in the most perfect way. As we said, you can actually just go for a book standard buy to let, and then as you progress, you will learn all these things, all the tricks in the book, where you can actually start leveraging a bit more, because not everybody wants to do the property up, and you can have that. But also the other part is, like previously people used to do a lot of flips. People are still doing it, but it's not for everybody now, given the tax changes and everything. And there's less, and obviously with the high interest rates, that's not there. But people are also doing rent to rents, which is a very popular strategy. Again, not for everybody. So you have to be able to put in time. So rent to rent is in some ways quite similar to your HMO strategy, just that you're not buying into that property. Instead of that, you're just renting it from somebody else and letting it out. There's a lot of money to be made in that. However, you should know what you're doing. So it's a bit like whether you do rent to rent service accommodations or HMOs. So people do it in different ways. So they can either just say we are a passive one and you have somebody managing it for you. Obviously that chews into your profits, but then there's still money to be made. And also that is in some ways one of those few strategies where you can save stamp duty and everything. So that's also one of the big reasons why people do that. And we were actually one of the first platforms in the country to offer rent-to-rent analysis and deal packs, etc. But I think for bog standard simple stuff, I would say buy to lets with refurbishment, if you can do so, you can allows you to actually get some money out. HMOs, if you are experienced and if you are willing to put in time, but it's definitely not a passive strategy. It's more of a full-time job if you want to be doing HMOs, but there's rewards for that as well. And the other one would be rent to rent, I think. I mean, I know you talked about commercial. I personally don't invest in commercial much. However, we see a lot of people going for commercial to resi conversions. That generally seems to be the most popular one. Again, depending on what stage you are in, that is something for you to do once you have some experience around that.